Hello guys, my name is Cliff. We are going to be discussing about Forex trading in Kenya. What are the dynamics that come into place when you're considering Forex trading? So the first thing that we are going to answer is what exactly is Forex trading? So Forex trading is the exchange of money over an electronic platform, and this money is actually traded for a profit. So most of the time, Forex trading involves short selling as well as long buying. So if a commodity is going up, then you just need to buy it. If a commodity is going low, then you just sell it and make a profit in the process. So in that way, I can say that Forex trading is actually the exchange of currencies over an electronic platform. And by taking advantage of the price differences, you're able to be a speculator. You know, the Forex industry is not controlled by any single individual. And for that reason, it is an amalgamation of the activity of investment banks and individual traders like you and myself. And that is exactly why you should get into Forex trading, because it is not manipulated by anybody. We are going to be focusing on how you can make this market your cash cow. Remember, we are talking about the market that is spanning globally and is, of course, trading $6 trillion in a day. So what is the history of Forex trading in Kenya? Forex trading has a 40-year-old history in this country. Since 40 years ago, people have just been speculating and trying to do manual buying or selling of currencies in order to make a profit. But the last 20 years have seen a substantial growth in the amount of deals that are coming in and the amount of dealers and the traders who are coming into the market. That is the Forex industry. This can be attributed by mostly the advancement in technology. Technology has been advancing so fast that is the direction that Forex trading has taken. So most of the Forex works by actually buying and selling. You buy anything that is going up, you sell anything that is going low. How do you become a part of this market? To become a part of this market, you actually need to go through a broker. And this is absolutely important because this is the first step. And if you make a mistake from the word go, then you might not be able to progress. The most important thing is to make sure that you're dealing with a broker that is regulated. This is something that you need to consider when you're choosing a broker. A regulated broker is someone who has submitted themselves to another authority so that they can be audited on how they conduct their business affairs. That is the very, very important thing. The second thing that you need to consider when choosing a broker, of course, is the funding methods. What is funding methods? Funding methods, we are talking about what are the withdrawal and deposit methods that this broker accepts. What is the point of making money in this industry if you're not able to withdraw it? That kind of dilemma is why you must choose a broker who allows you to withdraw and deposit money through M-Pesa. This is absolutely important. The third thing that you need to, of course, look at is the leverage. Any broker that is giving you a leverage of anything about 1 to 100 is a good broker. Leverage is a multiplying factor and it enables you to actually make huge amount of profits and from very small price movements. And this is precisely the reason why you do Forex trading through a broker, so that they can give you leverage. So if you're dealing with a broker who is not giving you leverage, then you're just wasting your time. The other thing that we are going to be, of course, considering, of course, is the cost of trading. What is the cost of trading for this broker or for this other broker? The cost of trading means how much spread is the broker charging you to trade on their platform? How much commission is the broker charging you to trade on their platform? How much swap is the broker charging you for holding positions beyond midnight? This is absolutely important to consider. And the other thing that you need to consider, which is also the final thing, is the customer service of your broker. So by customer service, we mean how much attention is given to every client, because you will need to deal with a broker who is actually listening to you. So beyond that, we're going to be considering 3 methods which you can use to consistently make money in this market. We are going to be considering technical analysis in this series. We're going to be considering fundamental analysis in this series, and we are finally going to be considering sentiment analysis in this series. So these three methods, you can actually use them to make money. And how do you use these methods to make money? Technical analysis, you're using mathematical models, statistical models, and geometric shapes to actually predict where the price could be going next, so that you can take advantage of that and actually make a quick buck. Sentiment analysis, you're looking at the book orders, the order books of the other traders, people who are in the market. So we are talking about the Oanda report, we are talking about the IG client sentiment index, we are talking about the COT. So sentiment analysis is about studying the trends of other traders and looking where to put your money. The final thing we are going to be considering, of course, is fundamental analysis. Fundamental analysis essentially involves, just studying the news. We have two kinds of news. There is macro and there is news. That's fundamentals. So macro is long-term news, and the ordinary news, of course, affects the market on a day-to-day basis. So we are going to be looking at each of these three methods and going deeper and deeper. And guys, we are going to be taking you from one level to another in terms of knowledge and how to know how to trade. So I hope to see you around, see you at the top. I hope you've learned something. Thank you very much.